This isn't your typical altcoin pitch. This is about Hedera and its native cryptocurrency, HBAR. A network that's been steadily engineering its way toward global relevance. Not through speculation, but through precision. HBAR doesn't chase headlines. It doesn't sell stories. It builds. It builds partnerships with Fortune 500s. It builds enterprise-grade infrastructure. It builds in places most crypto projects can't even access: government systems, regulated industries, institutional workflows. While most people were busy trying to 10x on hype, Hedera was architecting the future in silence. But silence never lasts forever. Because heading into 2025, 4 brand new developments are converging. And together, they form a thesis that's impossible to ignore. These aren't recycled updates. They're fresh catalysts with long-term implications, revealing why Hedera may no longer be early, but it's definitely not late. So if you've been watching from the sidelines, or worse, ignoring HBAR completely, this is your reset. This is your full-spectrum view of a project the masses still underestimate, and the sharp money is quietly accumulating. Let's peel back the layers. Let's break down what's really happening behind the scenes. Let's talk about 4 brand new reasons why HBAR could explode in 2025. And why, if you're serious about asymmetric opportunities, this might be the single most important breakdown you'll watch this quarter. Let's begin. For years, crypto has tried, and mostly failed, to gain meaningful traction with governments. It's not for lack of effort, but the truth is, most blockchains weren't built to meet the standards of regulated industries. Speed, cost, scalability? Sure. But compliance, finality, transparency, and auditability? That's a different game entirely. And it's in that game, the serious, slow-moving, high-stakes world of government infrastructure, that Hedera is quietly winning. Think central bank digital currencies, or CBDCs, carbon markets, and beyond. In 2024, whispers turned to pilots, and pilots are now turning into frameworks. We're talking more than a dozen governments and institutions exploring Hedera's technology for national use cases. CBDCs that require instant finality, low-cost transactions, and immutability without sacrificing energy efficiency. Carbon credit markets that demand traceability, accountability, and fraud-resistant verification. Land registries, digital identity systems, and public record-keeping, the backbone of functional governance that needs both speed and incorruptibility. These aren't just possible use cases on some pitch deck. These are live, in-progress explorations, many funded or supported by bodies like the HSBC-backed Global Blockchain Business Council, UN organizations, and sovereign agencies. And here's the kicker: in almost every case, Hedera's consensus model, built on Hashgraph, not blockchain, is what gets the green light. Why? Because it offers asynchronous Byzantine fault tolerance, or ABFT. What's that mean for you? It's a level of mathematical security that not even Bitcoin or Ethereum can claim. Imagine trying to coordinate an attack where every single message could be delayed or tampered with, and still, the system reaches absolute agreement, instantly. That's ABFT. That's Hedera. One of the most compelling signs of deeper institutional acceptance came through Hedera's involvement in FedNow integrations. FedNow is the US government's real-time payments infrastructure, a system that will define the rails of digital money flow over the coming decades. When payment processors and banks already inside that system begin working with Hedera, it's not a stretch to imagine Hedera becoming part of the next-generation money layer. Not in theory, but in practice. This isn't retail-friendly hype. It's infrastructure-level integration, and it happens slowly, until one day it doesn't. Why does this matter? Crypto investors often chase volatility. But the real wealth is built where the masses aren't looking, in the places that are harder to understand, slower to develop, but ultimately more permanent. Government adoption isn't a headline. It's an inevitability for any project that wants to be around in 2030 and beyond. And right now, Hedera is positioned closer to those corridors of power than almost any other digital asset, period. This is how a utility token becomes a critical utility. This is how protocol layer infrastructure becomes nation-grade infrastructure. And this is just the beginning. Now, let's talk about the Hedera Governing Council. In crypto, partnerships are often fluff. Announcements with no follow-through, names with no weight, and promises that dissolve in silence. But the Hedera Council is not a marketing gimmick. It is a governance structure backed by titans, and it may be the most strategically underpriced asset in all of crypto. Hedera's governing council isn't made up of random DeFi projects or startups trying to find product-market fit. It's comprised of some of the most powerful enterprises on Earth: Google Cloud, IBM, Boeing, LG, Nomura, Dell, Standard Bank, Deutsche Telekom, Shinhan Bank, Avery Dennison, Magalu, ServiceNow, Hitachi. This is a who's who of global infrastructure. And together, they don't just invest in the network, they run it. Unlike many crypto projects where governance is delegated to anonymous whales or developers, Hedera is owned and operated by entities with real-world accountability. No single company can dominate decision-making. Each member gets one vote. Google has the same governance power as a university or a bank. Council seats aren't permanent, new voices rotate in, ensuring no long-term monopolization of power. These companies don't gamble on pet projects. They commit where there's real-world alignment and long-term upside. They have billions in assets, reputations to protect, and regulatory obligations to uphold. And they've chosen to run on Hedera, not Ethereum, not Solana, not Avalanche. SK yourself, what other crypto network is governed by Google Cloud and Boeing? What other project has IBM and Dell building tools directly into its ecosystem? But here's where things get even more interesting. These aren't passive stakeholders. Many are actively using or integrating Hedera into real enterprise workflows. Avery Dennison's Atma.io is tracking over 30 billion products using Hedera, from apparel to food to medicine, giving consumers and brands full lifecycle transparency. ServiceNow, the backbone of corporate workflow automation, is exploring how Hedera can bring real-time verification and trust into global operations. Standard Bank, the largest African bank by assets, is piloting solutions that can redefine financial infrastructure across the continent. LG has launched ArtLab, an NFT platform built on Hedera that targets mainstream users rather than niche crypto audiences. Dell is researching how Hedera can provide decentralized trust in data provenance for AI and IoT systems. Each of these integrations feeds into the same flywheel. Corporate trust leads to utility. Utility drives network usage. Usage drives token demand. Demand raises value. And it's all happening without the noise. Why it matters. Retail may chase memecoins, but institutions build ecosystems. And institutions trust other institutions. That's Hedera's secret weapon. When billion-dollar brands with decades of infrastructure decide to build on a crypto network, it signals a paradigm shift. Not just for Hedera, but for how blockchain, or in this case, Hashgraph, is finally moving from speculation to production-grade infrastructure. Most crypto projects promise partnerships. Hedera is governed by them. That's not just bullish, that's foundational. This isn't mass adoption someday. This is mass adoption happening, just not where crypto Twitter is looking. But what happens when the very essence of wealth, real-world assets, starts moving onto the Hedera network? This brings us to our next crucial catalyst, the often overlooked, yet immensely powerful world of real-world asset tokenization. There's a massive misconception in the crypto space that institutional adoption is something that happens overnight. A sudden influx of capital and headlines from BlackRock, Fidelity, or some high-profile bank. But that's not how it really works. Institutional adoption is a slow burn, quiet, calculated, and deeply strategic. And that's exactly what's happening with Hedera right now, especially in the realm of tokenizing real-world assets. What is tokenization? Think of it like this: taking something valuable in the real world, a piece of real estate, a rare painting, even a barrel of oil, and turning it into a digital token on a network like Hedera. Why is this a game changer? Because it unlocks trillions of dollars in liquid assets, making them fractional, transparent, and instantly transferable, 24/7. This isn't just about moving money, it's about making all value move like money. Hedera's architecture, particularly its energy-efficient Hashgraph consensus, puts it in prime position for the growing demand for ESG, environmental, social, and governance compliant solutions. As ESG regulations become more aggressive worldwide, companies need platforms that not only perform but also align with their sustainability goals. Hedera's low transaction costs and minimal energy consumption make it an ideal choice for businesses looking to track carbon credits, manage supply chain transparency, and prove their sustainability claims on an immutable ledger. This is a silent wave, building momentum. Dell is exploring distributed ledger use cases for edge computing and data sharing. IBM has showcased Hedera in its enterprise solution stack. The Hashgraph Association and Deloitte have joined forces to enable corporations to measure, track, report, and tokenize evidence-based ESG impact and sustainability claims directly on Hedera. This is about bringing the balance sheet of the planet to the public ledger. So, let's connect the dots. By now, it should be clear, HBAR isn't just riding momentum. It's building momentum. Each of the 4 reasons we've explored, from its unmatched enterprise partnerships to its regulatory-ready framework, its blazing fast Hashgraph consensus model, and its quiet but steady expansion into real-world markets, points to one undeniable truth: this isn't hype. This is architecture. While most crypto projects are still fighting for market fit, Hedera already has it. While others are pivoting with every market shift, Hedera is executing a blueprint years in the making, backed by institutions that don't gamble. It's tempting to compare HBAR to other layer 1s, but that misses the point. Because Hedera isn't trying to win a popularity contest. It's trying to become invisible infrastructure, the kind the world uses without even realizing it. This is what it looks like when a network skips the influencer game and builds with governments, banks, energy giants, logistics leaders, in silence and on schedule. And if you've been in crypto long enough, you know how this plays out. By the time the headlines catch up, by the time retail starts chasing green candles, the asymmetric opportunity is already gone. The bigger picture? In an industry overflowing with promises, pivots, and vaporware, HBAR is playing a different game. It's laying the foundation for something much bigger, something built to last. This isn't just about a coin going up. It's about a network solving real problems at enterprise scale with actual partners, not just pitch decks. From Fortune 500 boardrooms to national government pilots, the Hedera ecosystem is becoming the go-to layer for institutions that need security, finality, and scalability without compromise. Now, here's the part that matters. The crowd will wait for headlines. The crowd will wait for price spikes. But by then, the real positioning will already be done. 2025 won't reward people who follow noise. It'll reward those who listen for signal. And right now, that signal is getting louder. Are you reacting to narratives or preparing for rotations? Are you chasing short-term pumps or positioning for long-term power moves? Are you reading charts or reading the chessboard? Because if you're here to just speculate, HBAR might not be loud enough for you yet. But if you're here to build conviction before consensus, to act before the window closes, to understand the infrastructure beneath the next cycle's winners, then you're exactly who this message was for. The potential for 5,000x growth isn't some arbitrary number. It's the mathematical outcome of the world's most powerful entities quietly building their future on Hedera's Hashgraph technology. The value unlocked by enterprise adoption and real-world asset tokenization on this scale is truly unprecedented. And HBAR is the key. You've been given the signal. You now see what the masses don't. The transformation isn't just for Hedera, it's for you. From being a spectator to becoming an informed participant in what could be the biggest wealth transfer of our generation. You're no longer blind to the quiet revolution happening. You're empowered. So, here's what to do next. If this video gave you the clarity most top altcoin lists never will, like this video. If you're ready for deeper breakdowns, smarter narratives, and research that stays ahead of the curve, hit that subscribe button. Share this with one friend who's serious about crypto, not just crypto Twitter. And drop a comment below. Tell me what you think BAR's biggest catalyst will be in 2025. Remember, there are projects that make noise, and there are projects that make impact. Hedera is building quietly now, so that when the world finally looks, it's already too late for those who didn't listen. Position early. Stay informed. Move with intention. This was more than a prediction. It was a signal. And the next move? It's yours.